We talked about the potential for a bear flag formation, right? So we talked about how if we look at this, we were seeing the beginnings of a bearish consolidation pattern. Basically, the bulls have a day or two to pop Bitcoin to negate the pattern and get us above this red candle high to negate the bearish pattern that's starting to form. If we ever do have a reset of financials, a reset of debt, and a reset of kind of getting back to actual where we should be managing ourselves as a country, as a world, without so much debt, there's a lot of potential downside. It's kind of on the scarier side to look at that.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Gareth Soloway is a financial analyst who talks about the trends and patterns in the cryptocurrency market, especially Bitcoin. He mentions a bear flag formation, which is a technical indicator that suggests a possible continuation of a downward trend after a brief period of consolidation. He says that Bitcoin is currently in a bearish consolidation pattern, which means that the price is moving sideways with lower highs and lower lows. He thinks that the bulls, the buyers who push the price up, have a short window of opportunity to break this pattern and reverse the trend by pushing the price above a certain level, the red candle high. He also talks about the possibility of a financial reset, which is a radical change in the global monetary system that could affect the value and stability of currencies, debts, and assets. He thinks that this could have a negative impact on Bitcoin and other cryptocurrencies, and that it is a scary scenario to consider. Let's join Gareth in a conversation about these topics and more.
We talked about the potential for a bear flag formation, right? So we talked about how if we look at this, we were seeing the beginnings of a bearish consolidation pattern. What did I say to you guys in this very game plan? I said, all right, basically the bulls have a day or two to pop Bitcoin to negate the pattern and get us above this red candle high to negate the bearish pattern that's starting to form. Remember, there's a immature flag pattern where odds of a down move are basically 50-50, give or take. As it matures, right? So as a bear flag matures, let's talk even a little bit more about this. So you have your down move. Initially, that doesn't mean much. It's 1 or 2 candles, 3 candles. That's, again, an immature bear flag. As we continue out, it starts to mature, 5, 6, 7, and the probabilities begin to increase that you're going to have a move down. So when it's in an immature period right in here, this is the chance to get this to jump so it can kill off that bearish move. Now, one thing I will say is we have not reclaimed this candle. We need to have a daily close above that candle. That would be the ideal. But even so, this now changes the bearish pattern to a point where it's no longer, if we hold, now listen, if we sell off by the end of the day, then this goes back. You have a sideways move. But as long as this holds, it does hurt the bearish kind of setup here. So just be aware of that. These are the things that I watch. And literally, this is what's amazing about this. When you're a true technician of the charts, guys, when you're a true technician, basically every tick in the chart, every candle, depending on where it is currently, it's constantly adjusting your probabilities. That's all my brain is. Every time I look at a chart, I'm saying, okay, what are the probabilities of a move down? What are the probabilities of a move up? And it constantly is in flux as it changes, as price action goes up and down. And so yesterday, we were kind of at maybe slightly favoring downside. It was an immature. This is now back to 50-50 if it holds here. Now, if it gets above this area here on a daily close, now it starts maybe even favoring a little bit of continued upside, maybe back to 44,000 or something like that. But again, these are things that you really want to pay attention to as you start to analyze charts. And again, that's why when you talk about something, sometimes you'll say like, oh, this generally should fall, and it might go the other way. But the charts are what are going to tell us that. And that will be key. All right, Ethereum. Let's talk Ethereum real quick here, guys. What we see is on the longer-term Ethereum chart, we are still stuck in this beautiful, beautiful channel. Channels are amazing, folks. They really are. All right, so we just tagged the upper end of this right here. We've come back in. Now, what you can see on this weekly chart is that we definitely have support right here. And so far, that is holding. So as long as this holds right here, this can bounce up. If you start to trade below, look for a move down into this range here, the lower end, where we continue to kind of find bigger support right down there, all right? So again, that's right around, I think, 1,700 and change. But right now, it's holding this level. I would say it needs to hold 2,200 essentially. Holds 2,200 on a daily basis, it can have that upside move still to it, or at least it favors that upside move.
Gareth is talking about the technical analysis of Bitcoin and Ethereum, two cryptocurrencies that you can learn more about here and here. He is using a charting tool to identify patterns and trends in the price movements of these assets. Gareth is focusing on a bear flag pattern, which is a signal of a possible continuation of a downward trend after a brief period of consolidation. He is saying that Bitcoin is currently in a bearish consolidation phase, which means that the price is moving sideways with lower highs and lower lows. He thinks that the buyers have a short window of opportunity to break this pattern and reverse the trend by pushing the price above a certain level, the red candle high. Gareth is also saying that the bear flag pattern is not fully mature yet, which means that the probability of a downward move is not very high. If the price holds above the lower trend line, it could indicate a change in the bearish sentiment and a potential for some upside movement. He is constantly adjusting his probabilities of a move up or down based on the current priced action and the candlestick patterns. He says that this is what a true technician of the charts does. He then switches to Ethereum, which he says is still in a beautiful channel pattern, which is a continuation pattern that shows the bouncing of prices between parallel lines of support and resistance. You can learn more about this pattern here. Gareth explains that Ethereum has just touched the upper end of the channel and has come back down. He says that there is a support level that is holding so far, and as long as it holds, Ethereum can bounce up again. If the price breaks below the support level, it could move down to the lower end of the channel, where there is more support.
Yesterday was a nice reversal. I'm going to look at the daily in the minute because we had that topping tail 2 days ago, which for me was an indicator until proven otherwise. That's how technicals work, by the way. Nothing's infallible, nothing's foolproof, but essentially you get signals that put probability slightly in your favor, and you use that to your advantage until proven otherwise. All right, so again, just going over this NASDAQ 100 chart, yesterday we had that pretty steep sell-off in the kind of early afternoon, a little bit of a bounce into the close. We closed right here. We then saw those Intel earnings and other earnings, Visa earnings. We started to fall back down. They climbed back up, but we're still slightly negative on the day here on the NASDAQ 100. All right, quickly going to the daily chart on the NASDAQ here, as I want to just show this again, is that we did get that topping tail right here. That was just 2 days ago. So this was yesterday. This was 2 days ago. So that would be on Wednesday. And again, the reason you pay attention is, number one, you have negative divergences on the RSI galore. So again, the negative RSI divergences, it makes me start looking. So a negative RSI, let's be clear on this, and I'll go over into RSIs and teach them a little bit more in a future game plan. But a negative divergence doesn't mean like, oh, it's a negative divergence, let me take that short. Or if it's a positive divergence, oh, let me take that long. What it does is it puts you on alert. It makes you say, okay, I see the negative divergences. Now, where will my entry price be? And that's where you start looking for things like a topping tail or a gap fill or a reversal engulfing candle. These signals that say, okay, this is as good a chance as anything. This is where this drop in this case could start. So for me, at least on this chart, we're now at a point where we can look and say, okay, well, we now have that topping tail right here. As long as price doesn't close above it right there on the daily chart, this is a short-term top until proven otherwise. All right. Now, again, if we go to our monthly chart, I always have to show this, guys. Well, I don't show it too often, but I do still think that at some point we will return to the longer-term average. So again, we look at this chart. This is the NASDAQ 100 chart going back to 2015 right here. Look at how amazing it is where we just kept on hitting and hitting and hitting, and then we went away from it for a little bit. We came back, we hit it. We went away from it a little bit more. We hit it right there. All right, that, by the way, was the COVID low. Amazing how the COVID low hit that trend line. And then we went on this insane bull run. Now, again, was it because the economy was so good when COVID hit? No. You know what it was? We all know this. It was a massive, massive spending. The government was sending out checks to Americans. They were running up debt. The Federal Reserve was pumping massive trillions of dollars of liquidity into the system via quantitative easing, as well as basically zero interest rates. And that caused that first move. This was your first big correction. Now we've seen this move up, which causes, again, to me, that's that M pattern that we've talked about, like the Bitcoin top. So again, if you look at the Bitcoin chart, it was kind of like this. That was your 65K level, right? And then we had that dip to 30,000. Then we went a little higher before the bigger corrective move. This was the 69,000 hit. I'm curious if this is something that is repeating. Patterns generally repeat. Are we ultimately going to roll over and have one of our bigger moves back down to this general target? I actually do think we do that. I do think we return to the longer term average. By the way, I just want to point out something here, and this is the stuff that drives me insane. All right, so if we look at the chart, let's go back even further, right? So if we look at the general trend of the market, so if you go back to a point where it was pre-Federal Reserve massive intervention. So we're going back to the early 2000s where the Fed was just getting involved a little bit at that point, but it wasn't to the extent. If we look at the trend of the market, all right, look at this trend, okay? All right, we could generally say this was probably a decent trend, right? Connected through all of this area. Then we had the dip in 09, right? This is the 09 collapse. And then we kind of returned to that same level as the Fed began to print more and more money. All right, so that was your first longer-term average. This is your longer-term average under QE. And then really what we've seen is, you know what your COVID longer-term, your averages? It's basically like this, right? So look at the more Fed and government spending there is. I mean, this is, to be honest, if you go back to a world where the Fed is not printing massive money and stimulating constantly and the government actually, let's say, has a balanced budget, I know, shocker, right? But this would probably be the longer-term average of the market down here of where we should be. Now, this is under kind of a little QE action, and then this is obviously QE plus COVID, right? That's the ridiculousness. But it does show you that potentially this market, again, if we ever do have a reset of financials, a reset of debt, and a reset of kind of getting back to actual where we should be managing ourselves as a country, as a world, without so much debt, there's a lot of potential downside. It's kind of on the scarier side to look at that.
Gareth Soloway is a technical analyst who uses chart patterns and indicators to forecast the price movements of the NASDAQ 100 index, which tracks the performance of 100 large-cap U.S. companies, mostly in the technology sector. He identifies a topping tail pattern on the daily chart of the NASDAQ 100, which is a bearish reversal signal that occurs when the price fails to break a resistance level and falls back, leaving a long upper shadow on the candlestick. Gareth also notices negative RSI divergences on the daily chart, which means that the price is making higher highs while the relative strength index indicator is making lower highs, indicating a loss of momentum and a possible reversal. He switches to the monthly chart and observes that the NASDAQ 100 has deviated from its long-term average, forming an M pattern, which is another bearish reversal pattern that consists of two peaks and a trough. Gareth compares the NASDAQ 100 pattern to the Bitcoin pattern, which also shows peaks and corrections, and wonders if the market is due for a rollover, meaning a sharp decline in prices. He acknowledges that the market has been driven by the stimulus measures and the low interest rate environment created by the government and the central bank in response to the COVID-19 pandemic, which has distorted the natural market cycle. Gareth warns that if there is ever a reset, meaning a reduction of debt and a return to a more balanced fiscal and monetary policy, the market could face a significant downside risk and advises caution. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Seller for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.